Hello, this is Steve Malone with Compass FX. Hope you're doing well today and again some good trades. Knowing when to exit a winner is oftentimes one of the most difficult things a trader can do. However, it can be pretty simple if you know what to look for. We've often heard it said, cut your losers quick and ride your winners. The next question has to be, well, where do I ride my winners to? There's got to be some sort of destination point. There's got to be some price level out there in space that the market's going to go to or potentially will go to. So today what I want to do is to talk about knowing potential areas to exit a winning position. The problem for most traders is allowing their losers to run and cutting their winners too quick, thinking that the market's not going to go any further. The fear and the greed factor come in, and oftentimes traders play off of fear more than they play off of greed. So let's talk about the fact that we're in a winning position. As you can see that the euro dollar was chopping around up and down through the Asian session and through the European session, and finally we have this nice move to the downside. Well, where's it going to go? How long am I going to ride this winner? Where could be potential points in time and space as to where this is going to? Now, one thing I like about the synergy model is something to let me know that I could hold in on a position if I chose to do so. And that is simply the price action channel, these two yellow lines right here. These two yellow lines, known as the price action channel, when price is below the price action channel and stays below the price action channel, you can stay the trade or surf the channel, as I often refer to it as. So in this case, we drop below, and notice that once from this point right here, all the bars below are away from the channel. You could literally ride the price action channel all the way to a low point. Now, it comes to the point that, well, is it time to get out of the trade? Or what if we got out back here? Or this pull up right here, could we have gotten out here? Maybe if we gotten out here, it had been too early. Let's take a look at a few things when we ride the winners. One thing to be aware of is you can always scale out of position. You can take some off and let the rest of your position continue to run to another potential level. That way you've already secured some profit. Or you can move your stop up, and that way you lock in some profit. Now, one of the things that I look for as I trade to determine when it might be time to exit a winning position is I will look down at the Trader's Dynamic Index, and I'll look to see what type of chart pattern is forming in the Trader's Dynamic Index to let me know that there could be a reversal in the market happening based upon sentiment. Notice right here that we have this low point, a lower low, and now a higher low. This right here is starting to form what looks to be like an inverse head and shoulders pattern. This is one indication to let me know to start looking for something up in price action. As you can see here, we have a swing low that's starting to set up. I have a low, a lower low, and now a higher low. We didn't quite have that over here. We had a low, a lower low, but this low was a little bit lower than this one. Same thing here. We had a low, a lower low, and then a low not as high as this low over here. So this is a true swing low situation. And we have a reversal chart pattern showing up in the Trader's Dynamic Index. This may be a good point to possibly exit my position. However, one of the things to look for is when the market gets up here and closes inside the price action channel or gets on the other side of the price action channel, definitely a point to consider exiting that winning position. Let's take a look at a couple other things you might want to consider. Obviously, you can look at your average daily range and consider the distance the market has moved based upon the average daily range. Right up above here, you can see a 5-day average of 125 pips. So if I go to the high of the day, which is right about here, and I look over to this point, 125 was right about this location right here. So I could exit my position somewhere in here or take some of it off based on the fact that it's reached this 125 pip average daily range. However, the market actually pushed lower than that. Today it looks like the market had pushed down on the euro here about 155 pips. So there was a continuation of about another 30 pips that I missed down on. However, once you reach your average daily range in the marketplace and the market still looks like it's going to continue going, you could reduce some of your position, scaling out, or move your stop up. Again, when we reach that average daily range level right in here, the market had turned based upon my TDI, was still turning and moving to the downside. The green line didn't cross over the red line, but bounced off the red line and continued moving on down. Now let's take a look at a couple other things you could look at. You could look at your daily pivots. You'll notice that the 125 average daily range was very near my S2 for the day. Some people will trade to the pivot level. So we basically had the pivot up here. We had the S1 here, and here's the S2, and now we're reaching down below, not quite to the daily S3. Another thing you could look at besides the daily pivots is the weekly pivots. And notice how the market has come right to the weekly S1 level. So I'm a firm advocate that you can look at your daily or weekly pivots as those potential exit points in a winning position. Now last but not least, I always consider the Fibonacci extension from the previous swing low to the previous swing high. So in this case, we have this move to the downside. I'll take my Fibonacci retracement tool and I'll run it in reverse. From the previous swing low to the previous swing high. And let's see where we've gotten to. The market came down, and notice that we hit the average high probability levels of 127, 140, 1.4, and 1618. Market broke the 1618. It pushed back up and tested the 1618 and made a pretty strong move back down to 200. Finally reached the 233 level, has almost reached the 2618. Looks like we got within the spread of hitting the 2618 level. Generally speaking, most positions will run somewhere in this area between the 127.2 to the 1618. When the market has some good volatility, some good push in a direction, expect it to run down to the 200 and possibly down to the 2618. The 2618 is generally a final point of termination for most moves in the marketplace if it breaks the 200. One last thing I want to think about too is going back in time and looking at, we'll take a look at the hourly chart here, going back in time and seeing was there a previous low or a previous high point that the market turned at. And we can see going back in time right along this low point, we can see another low point right here. Now that's about right where we're at, and that's where the market turned. So this is going to be a key level right here that we could probably come down, hit the support level based on this previous low, bounce off of that, maybe test it, and then we break through. If we break through, then we look to see is there another point further back in time that the market went down to. And it looks like we have this point back here in time right around the 2540 area. If we break this level here, that's right about the 2550 level. From there, then you look at the next lowest point, and that next low point looks to be about 2514. So let's review a few things I've talked about. First off, you can ride the price action channel and look for reversal type patterns appearing in the Trader's Dynamic Index. Also look for a potential exit when the market closes inside the price action channel or on the opposite side of the price action channel. Look at your average daily range, look at your pivot levels, daily and weekly, and look at any Fibonacci extension levels. Beyond that, then go look at previous support or resistance levels that the market might have reached. So today, we reached one of these low points. If we break through this, then look at the next low point. So these are areas to identify where the market could potentially go to. Don't leave it to chance, but simply go out there and identify the high probability points as to where the market's going. When the market reaches one of these levels, you have a choice to lighten your load, scale out of the position a little bit, or bring up your stop to break even or closer to where the market's currently at. Well, folks, this is Dean Malone with Compass FX. Hope some of this information about identifying when to exit a winning position will help you in your trading. Y'all make it a great day, get some good trades, and we'll talk to you next time. Bye-bye.